Melissa, Alphabet bouncing back in the third quarter. Among big tech, of course, it has been the underperformer amid the pandemic. Its rebound now seeing it outperform in the after hours. Core advertising revenue returning to growth after its first revenue decline in its more than 2-decade history. That was last quarter. Key is what the company sees going forward on this point. They didn't really give us much. CFO Ruth Porritt telling me that they did see a broad recovery in advertising this past quarter, and that was in line with the economic recovery. But she said there's still uncertainty on the call. She said that there are signs that user behavior is beginning to return to normalized levels. Everything else, guys, was strong, from YouTube revenue to Play to Cloud, which grew revenue 45%. Going forward, CEO Sundar Pichai said that they will further break out Cloud as a reporting segment so that investors can track aggressive investment and progress. Of course, that reflects Cloud's growing importance to Alphabet's overall business and perhaps the competition there. Lastly, guys, I would just note that there have been at least 2 questions on the DOJ lawsuit and increased antitrust scrutiny, which has been building around the world. Back over to you, Melissa.
Deirdre, thank you. Debo with Alphabet's results. Tim Seymour, this, as Deirdre had mentioned, had been the laggard going in among the big tech giants for the year. A laggard versus its peers, a laggard versus the NASDAQ. Are we setting up here for, dare I say it, a golden age for Alphabet?
Well, the profitability, look, the massive beat here on the bottom line is very encouraging for Google shareholders who have been a little frustrated. And yes, if I had to sum up earnings of the big four here, there's no question that the response to the share prices is a function of really where these stocks have come from or not come from. I love the fact that YouTube is now a $5 billion business. I think that's going a lot higher. The fact that the cloud is $3.4 billion. I mean, breaking out, and if you look at all these separate businesses, in addition to the core search juggernaut, which really is showing no signs of weakness, ad growth back up close to 10%. So yes, Google to me is way too cheap at a time when the 3 other companies we're talking about, and even Facebook, which struggles on the low end of valuation scale, have re-rated, and Google has not. And Google really, I think, took a major step here. But it's about breaking it out. It's about transparency. And I think, that's part of what we're getting there.
I mean, they're saying that it will, from this point on, break out Cloud, Gene. Seems to be a very good sign, a sign of confidence in the growth of that business.
It is. I think it speaks to a bigger opportunity with the stock. We talk a lot about search. We talk a lot about cloud. Breaking out cloud is an indication, they want to get more at illuminating other parts of the business. And of course, there are other bets. This is not above the fold in the conversation today, but I think any investor who is buying Google right now should pay close attention. They've got some gems in their other bets around longevity, around the future transportation, potentially even flight. And so when I think about this, the numbers, it's nice to see the swing back in the growth rate, snap back to a normal level for Google. But I think it sets up a very simple narrative around Google, which is stable core business and other bets, which could provide some upside to the multiple in the years to come.
Karen, I want your quick take on Alphabet. And I'm wondering if this confirms what you already believed about the company and its valuation, or if this makes you feel like it deserves an even higher valuation than you thought 24 hours ago.
I feel like Mike Pence, there was just a fly there. I think that it does deserve a higher valuation. Remember, Google has one of the biggest cash hoards ever. And so we saw a little bit of buyback here. I think it was maybe about $8 billion. I'd like to see them do more. But this is really a validation. And remember, Google has much more exposure to the travel business. And obviously, travel business is not where you want to be right now. And so I think that they're going to continue to see improvement. It should be higher. It's actually been surprisingly weak. So if I didn't own any, I would probably buy some even up. It's hard to buy something up this much, but I would want to own it because this is an extraordinary business and there's a lot to like. And remember, this is an evolution. When Ruth Porritt got there, it was sort of a grown-up, and then she started to show, they broke up the 2 businesses. We started to get more clarity. We'll get some more on cloud. So I really like this name.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.